Good afternoon. The noonday gun has just gone off here in Cape Town, our studio where we're based, and which signals the start of our weekly webinar. Ladies and gentlemen, esteemed participants and distinguished guests, welcome to this exceptional weekly webinar hosted by a real estate investor on Wednesdays and Thursdays at 12 o'clock. Thank you for joining us. And today's webinar masterclass is brought to you by a real estate investor in conjunction with the Assist Group, connecting distressed property owners and property investors to a symbiotic investment platform. My name is Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor, South Africa's leading independent digital magazine, content and education platform for more than 16 years. I'm honored to be your host and moderator for today's masterclass, and I'm humbled to guide you through this transformative learning experience today. And at REI, our passion lies in serving the South African property and global real estate and business community through our extensive platforms. From our comprehensive website, rei.co.za, to our highly informative monthly digital magazine, Real Estate Investor, an array of engaging webinars like this, masterclasses, live events and seminars, and a wealth of educational material for business owners, property investors, entrepreneurs, and practitioners. So before we dive into today's webinar, for some housekeeping first, if you accidentally do log out by some chance, just remember to use the same link as before. You will get back in. Attendees that registered for today's webinar who could not attend today's live session will be provided with a recording. I would like to remind you to make the most of this interactive experience, and throughout the webinar, we encourage you to ask questions, and you use the Q&A box chat feature, which is located on the bottom right-hand side of your screen, and there'll also be a poll where we would like you to vote on multiple choice questions, which will pop up on your screen. All you have to do is just select your particular item and then click submit, and we will let you know and prompt you at that time when that happens. We will reserve some time at the end of this webinar to address many of your questions and queries as possible. So moving on to our topic for today, Impact Investing 101, exploring impact investing in real estate for a better future. Our goal today is to delve into the world of impact investing, specifically in the realm of property investment. And today we'll highlight the numerous benefits of impact investing and how it can shape a brighter tomorrow for everybody. So today our valued and guest speakers are, and on impact investing, are Daniel Lombard. He's the founder of the Assist Group. He has an impressive 35-year career in the property industry. And just so that you know, the Assist Group are an esteemed firm renowned for its expertise in direct real estate investments. So Daniel, welcome to you today.
Thank you. Appreciate it, Neil. I'm honored to have the opportunity, and I just want to thank all the attendees. I think it's a very good investment when you start investing in yourself by education. So looking forward to share some of the information with you guys.
Wonderful. Great having you on board here, Daniel. And our second guest speaker is Gerhard van der Westhuizen. He's the Direct Real Estate Officer at Assist Group, and he has an illustrious track record of 30 years in property investment, financial planning in the property development sector. Welcome to you today, Gerhard.
Thank you, Neil. I'm glad to be here. I'm looking forward to sharing what we have, because I believe it really is making an impact.
Wonderful. Great having you, Gerhard, as well.
Thank you.
So let's start off the webinar, and I think I'm going to start off with you, Daniel. Can you maybe share with the audience how you actually help clients? Just give us a little bit of a summary of the model, because we are seeing a tough market at the moment. I mean, there's distress. So maybe you can share just how you help property owners and also investors.
Yeah, thank you, Neil. I'll touch on the model, so I'll quickly jump into maybe a bit of a presentation here to just illustrate some of what we do and how we do that. And I trust everybody can see.
Correct. Yes.
Is it clear?
Perfect. Perfect.
Yeah, thank you. So I think I would jump off with an initial story. You know, we're looking at the first point there. The intrinsic part of the Wealth Assist model is to actually make impact. You know, and I never thought and knew about the different opportunities, how you can actually help people while you're actually making good investments. I always thought that going to auctions, and especially in the previous years, from 1996 there around, we were involved in that. And I think most of those type of things, when we go there and we take that opportunity of buying on auction, we obviously not necessarily take think about what happens with the guy on the backside, because we always justify it because it's simple. If I don't buy it, somebody else is going to buy it. I do believe that through that years that I actually did that, I realized that this makes me uncomfortable. And at that stage, we started making a decision to say there must be a better way, you know, and I think that's where it all started, when you start seeing families fall apart, that type of thing. So for us, we started moving into the situation where we say, okay, what can we do? Can't we assist the real estate owner at the same time than what we are doing in the case, instead of just buying it at a discounted value, the guy sits with some debt afterwards. So we did a proof of concept over the last 9 years with private real estate investors through the term, where we really looked at what is the ways, you know, what is the challenges for clients, and with the main purpose to actually recover the client on the end of the day and help them keep their homes, but have that same property as security in the process. Unlock equity, because sometimes there may be trauma or some reason why they became into difficult. Some is just not good management of finances, and etc. And all those type of things can work towards those kind of challenges, which we actually see today with the petrol prices, all these different things, interest rate hikes. It's just escalating that on the end of the day. And we use that to consolidate debt due to these things, settle, so it can be job losses or whatever the case may be. And then obviously doing that, you have to have funds and you have to have money to do that. Now, that is where the investors came in, and that's where we said it always have to be a great transaction for the real estate investor. Otherwise, it's not, you won't have the funding. So we started putting that together and making sure that it can protect the real estate investor, help him to make a considerable profit or excellent profit, in actual fact, substantially better than what's available in the market, whilst having good security and making this positive social and financial impact. And part of that financial impact is actually educating the real estate owner in the process, taking through what we call a wellness program, where we rectify their scores and etc. and deal with that. So obviously a big challenge and part of the industry problem is at the moment is the fact that currently the whole industry is very much focused on educating people to look for situations where they can actually buy people who are in distressed properties, instead of going towards the approach that let's rather see how we can help. And I think that is a mindset that needs to change. And we have been working with the institutions, two of the top banks at the moment, work very closely with them to actually start providing these kind of solutions at the early stage with those real estate owners, and making sure that we can package it in such a way and get creative with this alternative options, and at the same time putting the package together and making sure that that we provide a type of package that is giving the necessary security. Now, the key is with this type of things, which any real estate investor want to always buy at the right price, and doing that, it still have to make sense on the end of the day in such a way that you can work with the owner. So we collaborate with him, look at his whole scenario, put this package together for that specific individual, but at the same time, all the time, making sure that it is a sustainable solution that we provide. And that on the end of the day, there's very good security for a real estate investor in the package, as well as a good return. Now, seldom that you are in the position that you can actually combine these things, where you say you have got excellent security, excellent returns, and a impact, financial and social impact in a person's life. So I trust that the summary of that, Neil, will give you a good idea of what the whole group in its offering provides, and also at the same time have two companies. We've got the Real Estate Assist side, who focus on putting those packages, and Wealth Assist on the other side, that look after the investor, where Gerhard is specifically coordinating those things.
Okay, excellent. I think it's a very, very unique approach. I think, Daniel, and I think it's very different to what we actually see out there, because normally, people hear about a distressed property, they want to sell it, they want to sell it as quickly as possible. I mean, you liaising on the one side with the banks, you collaborating with the investor, the property owner, and you're still turning it into a deal that there's a win-win scenario. So I think kudos to you for doing that kind of thing. So before we move on to Gerhard, we're going to put up some poll questions, and I'd just like to put up some poll questions up there. So if I could just ask the team. So there's 3 questions that we're going to ask, and I'd like just to do this quick survey. These 3 questions that I'd like you as the participants. Very easy. What you do on poll 1, who carries the expense of the interest rate, rates, tax, levies, and maintenance cost increases? You as the real estate investor, or secondly, you as a tenant? You just you tick in that tick box over there. The second question is below. You've got 3 options. How do you do property inspections, valuations, and due diligence? And you're only going to choose one, once again, out of 3. Is it I do it myself, I appoint external professionals, or other? And then the third question is, are you making social and financial impact on your current real estate investment? So we're putting you to work here, panelists. They are not panelists, rather the attendees. So please, if you just choose one out of each one, and then all you do is you click submit once you've submitted those questions. So if I could ask everybody just to submit that now, and then I'm going to hand over now through to Gerhard. So Gerhard, I think, what's quite important here is that, we look at those questions, maybe take us through the key things and some of the basic principles of property investing, and maybe just share with us, because sometimes we tend to forget those things.
Thank you, Neil. Yes, now look, I mean, every investment decision needs to be benchmarked against some form of metrics or criteria that you need to look at. And I think that's what we've tried to do here with a short checklist. And then we thought it will be valuable to actually do a comparison compared to the national averages, and that's what we actually achieve here at Wealth Assist. So the first tick box for the investor is he needs to actually buy right. You secure your returns on the right price levels. And if you look at it currently, most investors will buy from the open market, and they will buy market value plus costs. And in many cases, then obviously paying more than 100% for that property in terms of when you added all the costs. At Wealth Assist, the reality is we never ever do a transaction higher than 75% of market value, which also includes the cost. Now, to put that into perspective, I think is absolutely critical. The next 2 years, your property will have to devaluate by 12.5% per year for you to take the risk of all the equity that is left on the table at the initial purchase price. So that's almost, in South African terms, it's impossible in my mind not even the market going sideways. It has to deteriorate by 12.5% or lower down. So the reality is that if you do this, your risk lowers drastically. The second tick box is obviously your capital growth and profit. Now, looking at the national averages, 3.5% to 5%. So that means that, here in Cape Town, we're living in a bubble. We know that we're getting wonderful capital growth figures, but on an average nationally, those are the actual figures that one looks at. Now, with Wealth Assist, it is what we call a predetermined capital growth of between 5 and 7% per annum. And we've got, and we'll show you some figures later on, audited figures that actually shows what we have done for the last 10 years. And the fact that it's predetermined, we will explain to our investors into the future how we actually predetermine and secure their profit margins. The third tick box is annual net rental yield. Now, that's an interesting one. We find that many people buy, long-term properties, but they actually don't measure it, especially on the residential side. So if you look at the net rental yield on a sectional title type of development or property, after cost, the returns is 7.5%. On a full title, it is 5.2%. So I'm sure that the slide will come back now. So, looking at that specifically, and I think the net yield for us to the investors is currently also predetermined prime, which is a 11.75% plus 2%, which means the monthly return for our investors are actually at this stage 13.75%. Now, I always say property investment is all about cash flow. If you've got good cash flows, you are taking your risk off the table. And in this case, you will be 2% above prime. So I think that's the third tick box. Now, looking at the securities, we always ask the question, so who is actually paying when there's an increase in interest rates, like we had over the last year, where there's an increase in terms of maintenance cost is going up. There's always something that you need to repair. Rates and taxes increases, and as you know, the landlord pays for that in a normal scenario. Now, with Wealth Assist, we've got a triple net lease, which means that the rent increases the moment interest rates or the rates and taxes or the maintenance goes up to, above a certain level. So from that perspective, the tenant carries the risk and not the landlord. It's built into our agreements, and that protects us. So our investors over the last 12 months has not felt that they were losing out, because this is the agreement with the current tenant. And just on that note, remember that our tenants were the previous owners. And if you understand our model, you'll understand that suddenly you've got an owner tenant who's got a different mindset when it comes to these cost and losses and damages to a property. So that is also something that's very important on our side. The fifth tick box is efficiency. So many times, people will run around, they will go to agents and they will, read papers, look at the newspapers, go to websites. But the reality is they have to spend quite a bit of time. So I always say that time and knowledge lowers the risk. So it's one thing to getting the information. It's another thing to actually benchmarking that information or actually having the knowledge from a legal perspective of what the risk entails in this property. So from our side, what we do and offer our people, our investors, within 2 to 3 hours, they will assess the risk. They will have the information. I think if not the only one, we're one of the few that allows our investors to do a desktop evaluation of the risk and the opportunity. We actually provide them with all the information, sitting in their sitting room or behind their desk and assessing it, which is an absolute brilliant process for them to I always say to them, even the small little corner that's got the crack is recorded in our reporting system before we actually publish the property as an opportunity on our website. And I think the 6 tick box, you know, the question is, most people buy for profit only, and we have made the decision, and now the reason why we do this is all about having that impact. Remember, we are saving families and their homes. So what we have as the opportunity for every investor to get involved, put that seed, as we would call it, in the ground, and actually the returns will multiply into the future. So we assist the people, and I always say, you know, when you think about the mother that's divorced and you have the opportunity to save them and their children not losing their home, then you are really making impact. And the reality is we provide a fair return for the investors that are actually involved in saving these families.
That's wonderful, Gerhard. I think, you know, it's a very noble thing you guys are doing. And I think there's value on both sides of the chain. And I think especially through now, we're seeing, you know, quite a tough market at the moment, increased interest rates. We're seeing, obviously, inflation goes skyrocketing. We're seeing, you know, rand devaluation and really, you know, also unemployment at all-time highs. So it is tough. So I'm going to go over back to Daniel. Is there any results? I'd just like to ask my colleague Alex if there's any results that we need to publish from the previous survey or poll that we did. We can put that up, and so if you can, you know, put those up and just see what they are. But we'll publish those results again at the end, and we'll discuss it. So thanks for putting that up for now, Alex. I'm just going to get on to so Daniel. So how do you help those distressed property owners while also ensuring investors are protected? They're still achieving above average returns when they're in trouble.
Yeah, I think, Neil, that's a question. It's a common question, and normally any investor that we have a meeting on the first meeting is the first question normally is, how is it possible that a client that can't pay today can pay tomorrow? And pay his monthly rental and recover and all these type of things, which obviously is a very, very simple and good question for any investor to ask. And but there's reasons for those things. And I think the most practical way for me to illustrate that is I'm going to use an actual case study that have taken place, and actually one that took place in the COVID time, which was even worse. In this matter, and this client specifically end up having challenges with his business due to the COVID term, that the hard lockdown time, and his income reduced. And during that income reduction, he obviously have certain expenses, monthly expenses that he had to keep up with. Started using short-term debt, unsecured debt, keep on increasing it, and when you look at these figures. And I ask you today, what do you think? How will you actually be able to assist a real estate owner with that kind of scenario? So if you look at that, and he's in that position where he actually has a short-term debt of about 550,000 that he built up over those period of time, and that obviously increased his monthly expenses hugely. If you look at his current market value of the property at that stage was about 1.65 million. His mortgage was very low. It was 510,000, but he couldn't increase. After he used the short-term debt, he placed himself in a position where he actually couldn't use normal finance anymore, because the banks are not allowed to lend him money. And that's part of our model, is one of the big reasons where there's such a big scope for us to actually participate in this, because the banks are not allowed to lend people money that's already overextended in debt, because that's reckless lending, and it exceeds the national credit laws. So in this specific case, he owed 510,000 on his mortgage. There was some critical maintenance. Obviously, when we do the kind of recovery type of project or transaction, we're not going to rebuild people's kitchens and that type of thing. It's more for critical maintenance where there can be future damage and things like that. So there was some maintenance that we had to do. The REI rates and taxes at that stage due to his shortfall was about 59,000, and his short-term debt was 550, as I said. His monthly expenses at that stage was at 87,000 Rand a month. His net income was at 56,000 Rand a month. So I don't think I have to, everybody can make the sum. This is a problem. Now, if you look at that, and I'm telling you, I'm going to help that guy, will you give me some investment? I think he will run away. And I'll be honest, when I sat with an institution, one of the top 5 legal team, and I actually presented this client recovery to them, they said to me, no, look, sorry, this guy's over the cliff. And I think if you look at what we have done with this client, you will understand fully what have happened here and what was the security for the real estate investor in this process. So if you look at the investor came in, he purchased this property at 1.1 million. So he obviously bought it at about, I think it was about 68% of market value, which actually is far lower than even the 75%, which is our benchmark. Which actually provides the real estate investor with substantial security. He actually takes transfer of this property, so there's no risks related to that. And in that case, we then settled all the short-term debt. Obviously, if you make the sums there, you'll say, how is that possible? Well, we discounted the short-term debt with about 38% settlements that we reached in this specific case. And then we take the client, what we call on the wellness program, fix their credit score, because now they don't have any debt apart from our transaction, which they have to refund at some stage. So we could fix their credit score quite early in the process. We did it over a 2-year term in this case. So then you must remember, you also have your capital growth through this 2 years, okay, of the property value. So somewhere between 3.5, as Gerhard said, and 5. Now, if you work on 5 plus the maintenance that we spend, the value of the property at the second year was 1.9 million, which is so your security is already substantially higher. This client then repurchased this property from you at 1,280,000 for his cost inclusive, which suddenly means that he has got a mortgage bond expense of only 12,000 Rand a month instead of that huge expenses on short-term debt, etc. Suddenly, this client is in a position where he's got a net exposable income of about 17,900, and his whole situation was turned around. So now the question is obviously, how much did it cost this client to actually do this? And I think that's very important in this matter. So his initial equity in this case, net equity was 531,000 after we finished with him, and that's very important to look at. As it was 635,000, which means that he had more than 100,000 Rand more equity after the whole scenario due to the fact that there was property growth. But secondly, on that, it means that he actually carried the cost of this whole transaction plus have an additional 100,000 equity. Yes, has he paid a price because he would have only had the equity if he was in a normal mortgage situation? Yes, definitely. So he loses kind of some part of that equity during that 2 year. And that's actually the only cost for him. But it's far more important for him to keep his home than be concerned about losing 1 or 2 years or part of that on the end of the day. The investor on the other side sat with a 68% exposure to market value, which I already touched on. His return was 18% per annum. On this breakdown in two ways, as Gerhard have touched on as well. The first way is on a monthly income. So if you want to use mortgage, you can use mortgage as an investor. So it will fully cover that because you get a prime plus. So you will be in a cash positive from day one, which means you, on the end of the day, made a great return. And then obviously why we are in business, very important, standing to lose their property. We stop that whole thing, stop the family breakdown, all those type of things. 50% of divorces happens due to financial crises, things like that. So you can look at those kind of stats and think, how did you help? How did you as this investor help this client on the end of the day? And I think that's the secret of how we do this. And there's obviously various situations with every single individual situation is different. And that's where real estate assist comes in and package that whole thing and make sure that it's a product that is viable for you as the investor as well as for the real estate owner on the end of the day.
Wonderful. I think nicely put there, Daniel. Just to check in with everybody there, we're here at the Impact Investing 101. So you are on this webinar. I just want to encourage you all to interact, to put in your questions. You got any questions? We're going to have a Q&A at the end of the webinar. So please put your questions in the Q&A box. There's no such thing as a stupid question. And so essentially, we need your interaction. Important to see what is the value that Daniel and his team are bringing over here to you, both the investor and the real estate owner. And we've heard it's a very unique model. So right, we've got some more work for you. There's some poll questions that's just going to pop up now onto your screen once again. And once again, it's multiple choice. And so there's 3 questions again on the second part of the poll. With your current properties, what was the market value you purchased the property at? Was it at 84% or lower than market value? Was it 85 to 95% of market value? Or was it above market value from 95 up even to 105%? Second question is, so just select one of those, one single choice. What is your current net monthly rental yield? Is it 4% or lower? Is it 6 to 8%? Is it 8 to 12% or 12% plus? I mean, that's where we really would love to be. But we'd like to get that feedback. And then the third and last question of the second part of the survey is, what is your current annual capital growth on the property? Is it 3% or lower, 3 to 5%, 5 to 7%, or 9% plus? So we look forward to that. So if you could please just complete that survey right now as we speak. And then while we do that, I'm going to hand over again now to Gerhard, and he's going to unpack the distressed investment opportunities. We're going to start looking at the returns, and of which many of the returns that they have are audited, and also the on-sales return. So over to you, Gerhard.
Thank you, Neil. Yes, I think when looking at this portion or industry that we in, we call it the ER of the property industry, we really focused on assisting it. And I think what makes us different than many others, we actually assess the owner, the risk about it, the financial risk of the owner, as well as the property itself. And, you know, when we go through a process, you've seen now the comparison. We actually do a detailed budget before and after, but, you know, and by the time that we actually continue into one of our solutions for this real estate owner, we have a perfect picture of where his finances are currently and where he went wrong. And depending on what the outcome is of that, we have 2 options that we call. The one is a recovery product, and the other one is an on-sale product. Now, the recovery product per se is a product where we actually assessed that the client can be recovered. He's got a steady income on it. He can actually afford to pay rent. And, you know, the more important one for that individual is, will we be able to recover him in terms of his credit score in 18 months to 24 months? If that is the case, and there is lastly a good portion of equity, as you've seen on the slide, in that property, then we know we can put this client on our recovery product platform. And that means, you know, different things, but in many cases, transfer of the property actually happens. In some cases, there's a recordal or a security bond registered on the property, but this means there's an income stream linked to this investment. And if the client or the owner does not qualify, we can easily assess. We see financially he is not recoverable, you know, in this shorter period, but there is still equity in the house and so on. We immediately tell him, listen, let's go to market, sell it on We assess the maintenance, as Daniel has said, the critical maintenance. We get a budget in, and we assess what will keep the bank away, and sort them out. And then we get that property ready for the market. And that is typically what we will call a flip in the market. So, and I think just mentioning again, both these products, remember now that the owner is living in that house. He's got some skin in the game. There's money on the table for him. And that changes the whole ball game in terms of the current laws in South Africa when you sign a tenant agreement or, rental agreement. So that is something that we can discuss in future with the investors. But the reality is the risk with this approach lowers so much so that we, in 9 years, had one client challenging the system because they've got so much equity in the property still. And then just in the next slide, thank you. The reality is, looking at the actual audited returns, over the last 10 years, on average, 21.14% was achieved gross returns. And the lowest put on that 1 year, what was it, 2016, you'll see, is 16.59%, and the quite a high 27.81% was it in 2015. So these figures has been, the returns of our investors in this specific product, and it really makes sense to I've spoken so many times about the effect of inflation and what levels of investment you actually need, and even more so when you retire. But the reality is you need far above 13% per month return or per year when it comes to your investments. Looking at the actual audited safe figures for an on-sale product for the last 10 years, you'll see there it's a number. It's gross returns of 31.42. Remember now, this is similar. The industry calls it a flip, but the reality is, the percentages are higher. The terms are shorter. We can actually do this on average. The return is and the transfers on the second portion is done in 9 months. So that means that your annualized returns are a bit higher. The lowest being 17.81%, and that you'll see is in 2013 when the model was still being tested and put together. But the moment we had it right, you can see the high score of 59.61, in 2015. Currently, it is around 22%, as we have seen in the last year or two. So definitely a capital return product. The recovery is a capital and monthly return product. So even for people that is investing for income purposes, a real option to diversify a portion of the assets and investments into these type of products.
Excellent.
Thank you, Neil.
Yeah, thanks, Gerhard. Thank you very much. I think real eye-opening stuff. And so thank you all for your questions. Please keep on submitting them. I can see they're starting to roll in. There's quite a few that's come through here. So Daniel, maybe you take us through the realities of the South African impaired property market. And I don't think many people are aware. I mean, we hear about these stories, but you've got the stats. Take us through.
Thank you, Neil. Yes, I think sometimes when I look at the market and we say that we want to take up about 5% of this market, it means it's actually about 3.4 billion rands worth of trouble. Okay, and that's only 5%. So if we look at the total number, you'll see that we're looking at about, I think it's about 68 billion at the moment. That is in the region of about 30 to 90 days and further in arrears on mortgages. And that's the value of the mortgages. So that gives you an idea of the kind of trouble. And that excludes any additional credit that needs to be covered and all those type of things. So the opportunity for this is huge. It's really like a massive market that's available. Obviously, the biggest problem is why can't everybody tap into it, is because most people approach the client with, I want to buy your house. And they don't never give him the option to actually look at a product where he can actually keep his home. I mean, when we used to start off in 9-10 years ago with doing this on a bigger scale, we found that when we call the client whose house goes on auction in about 3 weeks, 4 weeks, then we realized that we are number 15 that calls, you know. Then the first thing that the person says, I hope you're not phoning me to buy my house, you know. And I say to them, I am phoning you, but not to buy your house, to help you keep your house. Then it changes the whole discussion. And I think that is where that whole approach from, you know, you buy something on an auction, you have to, if you've got a difficult owner and he's stuck in there, it costs you 50 grand just to get him out if it's a very quick case. You know, I don't even want to go into how long litigation takes these days. I mean, I'm sure some of you do understand and have seen that. So if we look at the alternatives, we have to come up with alternative kind of solutions. And I think that's what we have done. We were very fortunate that I was experiencing all these things and decided that this is not a workable thing for me to misuse people's misfortune anymore. And I wanted to change that. And I think then ending up to where we are today, our target is really to do that. But if you as a real estate investor want to do that, just think about it yourself. Okay. To do that, you have to do all that homework yourself. Now, what we do is we've got a team of people, very experienced and tested over the last 10 years, who actually goes into this, really prepare this client situation, look at it all, and then make it available to the various investors. Obviously, to reach that target, we also include institutional investors in the process to do this. But even then, I think, looking at the figures, I think I don't have to say much more on the fact that the market is huge of the impaired industry in South Africa.
Awesome. Okay, now we're going to get into Q&As. We are at that time, and I see people have put lots of Q&As in there. And so between Gerhard and yourself, Daniel, you can decide. And we know that for everybody, you know, asking questions during a webinar can sometimes feel like diving into a pool of ice cold water wearing a banana suit. But it can be very awkward. But hey, we're here to make it fun and memorable. So folks, don't be shy. Unleash your inner witty genius. Unleash your curiosity. Remember, in the wise words of Albert Einstein, the important thing is not to stop questioning. It has its own reason for existence. So, first question, Daniel, from Anonymous, what is the tax implication if I invest as an individual versus if I invest with a company? Can I do this through a company, or is it strictly individual?
Yeah, I think that's a very good question. We have got a specific tax, if I can call it a tax guidance of what it should be. But I want to just put a disclaimer here. I don't advise on tax because I'm not a tax expert, and I won't put myself out to be one. Although through this process, we have obviously determined, and it all depends on what your current tax structures are, but you can buy in any entity, trust, private, or a company. We definitely have specialists that we work with literally every day, and you'll see on the July presentation coming up, the 4th of July, I would suggest that you attend that for the person that asked that question. We have some of that additional advisory people. If you are a registered or let's call it rather a accredited or a private client with us and are unavailable working with us in the relationship with us, we actually arrange that advice for you for that initial setup for free. So there's no additional cost to that advice. And then we will obviously collaborate with your auditors if you have a company or specific level of type of investor, because there's certain type of investors that we've got really, really good structures that can actually help you a lot. But we are not in the structure forming business, so I want to clarify that. We are in the business of giving you opportunities on the end of the day and I hope that addresses your question. But most of your tax will be taxable if you're on an on-sale transaction. You will normally pay tax on that as an income. If you are on a transaction where you do a recovery, it may fall within in a capital gains situation. But we also have structures that can change that and make it far more tax beneficial for you. So I hope that addresses that question.
I think it
Gerhard,
is.
I don't know if you've got something to add there, but
No, I think you've answered that one well.
Yes.
There's no doubt.
Yeah. Daniel, can I just ask you, just take down the slide if you don't mind, and then I think we're going to move on to our next question. There was obviously an inquiry with who do we contact, name, number, email. If you have investors you want to refer, even distressed owners, and obviously there is absolutely a referral program. There is a link that was sent through to you, Amanda, or anybody else that would like to get that. So just if we could just drop the link again into the box if you want to refer any investors or any distressed owners that are either investors looking for properties or distressed owners. Just click on the link there and we will certainly help you there. So we encourage referrals, so please send them through. Our next question, and I'm not sure who's going to have a crack at this, Gerhard or Daniel. Okay, so when the investor purchases the property, does the property transfer to the investor? Gerhard?
Well, there's a very clever guy that says protecting the downside for the upside will look after itself when it comes to property. And this is one of the areas that is very important to understand. We are involved in direct property investments, and that means that it happens in the deeds office. So in some cases, the property will be transferred into the name of the investor. In other cases, there's different structures where there will be a registration in the deeds office of the investment, from a security bond perspective or collateral bond. And, in other instances, the type of agreement that we do is being prepped and ready, and depending on the terms of that agreement, it will be submitted into the deeds office as the agreement requires. So so the reality is all that we do is being protected with deeds office action on different levels.
Excellent. Thanks very much, Gerhard. I think nicely answered. And next question, when the property is sold on the open market, what are the costs to the property owner? And let's look at also your fees, because you also got to make money. You bring some value to it.
Are we? Yes. Thank you, Anne, for that question. I just want to ask, do you actually mean that for that, when you say the property owner, do you mean the investor or do you mean the previous owner?
Well, I think, let's make a few assumptions over here, Daniel. So maybe look at both.
And then in that case, we obviously will proceed with appointing estate agents. We don't do those.
Yeah, we seem to have lost Daniel. Daniel, we just frozen for a moment there. We're not quite sure what's happened, but you seem to have frozen.
I can hear. There's a drop. Yeah, but maybe I can come in here. Yeah, look, yes. When it comes to the property, the current real estate owner, and we do have to go to market on that on-sale agreement, all the cost, and from an investor perspective, all the cost is included. So that means that there's no additional cost when it comes to the sales side of it. And because what Daniel was saying is we actually we take control of the marketing process, but we actually then appoint on a national basis a local estate agent that is the specialist in that area. and they do receive their commissions and fees, but the reality is it's all built into the calculations when it becomes, for the investor and the, how do you put it, the returns calculation.
Yeah, and I think one of the points we could probably add to that, Gerhard, is that the money doesn't go to your bank account.
Oh,
So
yes.
a lot of people, well, you're the guy that's the vendor and whatever it's going to go. You work through
Yeah.
the attorney's bank account. So maybe you just want to elaborate a bit on that.
Yeah, I think that's very important from the investor perspective as well as from the owner's perspective. We don't receive the monies, it's going. And I must be honest, if you look at the mandates that we sign with the investors, because we only work on mandates with the investors, even for the attorney to transfer money out of that account, you can't believe what the banks are throwing at them these days. It is really, it's really, and if they get to steal it, it's protected by the attorney's fund. But the reality is, all instructions is in writing. It's thoroughly vetted, and even the banks do their portion. Not to take a risk on that. So yeah, very important point. Thank you, Neil.
Compliance. Yes. So I think that's
really and the LTT is different. Money laundering, well, not even a consideration for those who think that you can do stuff like that. Yeah.
Right. Excellent. So next question for Marcus is, what is the minimum investment? What and when can one exit the investment? And then the question aligned to that also from Marcus is, how and what are the frequency of dividends paid? Daniel, do you want to have a crack at that again?
Yes, fantastic. Yes, so what is the minimum investment? We've got investors that invested 25,000 Rand, which is slightly low. We prefer to work with something from about 50,000 if it's cash only, to 100,000 more. And that type of thing. But if you are a startup in that situation, this is part of our vision, is to actually help you to build wealth, and that is Wealth Assist's whole concept. So we literally help most people that has got any money from that kind of investment on cash. Everybody that also qualifies for a mortgage. So if you qualify for a mortgage for at least about 500,000 upwards, meaning that you don't even have cash, and we want to do a transaction like that. Obviously, the type of transactions will be slightly limited, but we can also assist you with that. With regards to the exit is fortunately very simple. It is, you buy the transaction, there's a predetermined term on every single contract. So if it is an on-sale transaction, it will normally be between 6 months to 12 months. Will be the time that you will have your money, your capital, and your returns back. In the recoveries, the average timeline is about 20 months to 24 months, which means every time that the transaction completed, there's no dividends. The money leaves you, and I think Neil touched on that, is we open up what we call for you a general investment account at the attorney's trust account. In your own, there's another opportunity comes up. Yeah, I want to use some of the profits to go but on holiday as well.
Okay, good. Right, the final question, because can you believe it? We almost be coming up to the bewitching hour, to 1 o'clock, and it's a final question. And I know, Daniel, you did touch on this already. It's from Anne, and you mentioned in the scenario that the owner's short-term debt was settled. Who settles the debt? And is this a cost to the investor, or is this a cost included in the purchase price? I don't know who wants to have a go at that, Gerhard. I see Daniel seems to have frozen up a bit. So Daniel, just so that you know, we cannot hear you.
No problem.
So Gerhard, we're going to have to give you.
If you remember the slide that we've used, you remember that 1.1 million, that was the actual transaction value on that property of that owner that was in distress. So we calculate what it will cost the owner to take out the short-term debt as well as the banks when it comes to them. And that is then made up as a total amount. In that case, it was 1.1 million. And then we take the money of the investor and we settle all his debt. And we actually take control of that individual's finances. So the rental is being paid, not by him to the banks and so on. We actually take control of that whole process and make sure that it is paid and that he doesn't make any more mistakes, if I can call it that. So it's actually being built into that total package, because what we're actually saying is he's got equity in his property, and if we can use that equity, we can actually save him by taking out all the short-term debt.
All right, excellent. Okay, it seems that we've lost Daniel. So there's one question I just want to get from Theo just to close. It'll be the final question. I'm sure you'll feel, can Wealth Assist handle a once-off investment of 3.5 million, or is it only small deals as they come up? Gerhard,
okay, that's a very good question. Yeah, you can hear the heart of Daniel. That's why I said 25,000. No, the minimum is actually 100,000, but we do help, especially when it's people coming into and the commitment is shown. So yes, we can do a 3.5 million. We've got, in fact, quite a few 3.5 millions and above. Because I think one of the things that I can just maybe say on that level of investment, we actually do an investment plan. We show the people or the investors what they will earn, what their asset value will be in 5 to 6 years. And before we actually invest, we determine the goals of this investor. So it will definitely be possible.
Excellent.
We'll gladly assist.
Thanks very much, Gerhard. Thanks very much, Daniel. What I'm going to do is ask you just to give your 1 minute, literally your 1 minute wrap up. So Daniel, starting with you, because I know you went in and out, and maybe you can give us your 1 minute wrap up. I also want to mention to the audience, for those that would like to pursue this, there's another opportunity, and there's going to be a seminar in Cape Town, and it's also a virtual event if you're also in Johannesburg or outside of any other, in fact, any other area in South Africa. And that will be next Tuesday on the 4th of July at 7 o'clock. And we'll be talking about wealth creation through distressed property investments. And once again, we'll see Gerhard and Daniel there. But there's also an opportunity if you're in Cape Town to see it live. So, so just click on the link below, or you can just go to www.rei.co.za and you go on to upcoming events, and you can just click over there and you can register. It's for free. And please come along, and you can actually find out a lot more there.
Thank you,
Daniel. Pleasure. So, Daniel, do you want to give us your final wrap, and then we'll get to Gerhard and we'll exit thereafter?
Yes, thank you. I think people understand a bit more about what we do and have a good idea of this, and I think they've all understand that there's huge opportunity here to really participate, make impact, make a difference with your money, but at the same time make proper returns, have great security during the process, and predetermined returns. And I think, I want to sum up what we all sow every day. Call it karma, call it what you sow, you will reap. There's always two types of returns, the current and the eternal.
Thank you.
Awesome.
Neil, maybe I can just conclude by saying today we've shown the people what we do, and the 4th of July, we would like to show them how we do it. And so please come. We've got a couple of seats at the venue that they can come and enjoy interaction with us. And the others, as we know, can from anywhere in the world, for that matter, sit and join and learn about South African real estate.
Awesome. Thank you very much, Daniel and Gerhard. And also to our attendees, thank you for being part of our webinars and your continued support. We look forward to welcoming you back in our future sessions. As I mentioned, there's a great opportunity to find out more next Tuesday, the 4th of July in Cape Town live, or you can also just log in virtually. It's at 7 o'clock, and you can get that at rei.co.za. And also our upcoming webinars, please mark your calendars for tomorrow. It's the same time. It's Thursday, the 29th of June, 12 o'clock, and we're going to be talking exploring housing for all, the obstacles, opportunities, and insights with our 3 experts on finance, property development, and also community development. And to secure your spot for that, you simply click on the registration link in the chat box below. And once again, you visit the rei.co website under upcoming events and you click register. Once again, our heartfelt appreciation to Daniel and Gerhard of the Assist Group for generously sharing their time and expertise on impact investing with us today. It was great insights, and I think it's a massive opportunity both for the investor and really doing good in the industry, and must really thank you. So in the meantime, we wish you all safety, success, and fulfillment in all your real estate ventures and your investments. And until we meet again tomorrow at 12 o'clock, this is Neil Peterson of Real Estate Investors signing off. Goodbye, everyone.
Bye.